Good morning and happy Friday, fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for April 19th, 2024. Well, we had a little bit of volatility last night. Dow futures at one point were down over 500 points as Israel conducted some limited strikes on Iran. We have improved a lot here this morning, but well, there's certainly some uncertainty going on in the market in that regard. Let's take a look at what happened overnight. First off, Asian markets had a rough night last night, down across the board. The Nikkei had the worst of it, fell 1,000 points last night, down 2.66%. We'll want to be keeping an eye on those. Shanghai, very limited response, so down only 8.96 points, so not much move there. European stocks this morning are decidedly bearish, but they have improved. FTSE and CAC only down around 0.5% on either one of those. So we'll have to keep an eye on that as the morning progresses. U.S. futures also down across the board this morning, feeling a little bit of pressure as this next wave of conflict creeps up here in the market. What is interesting, however, is in response to that, we had a big jump in oil, but right now we have settled back down, and oil is down 44 cents, oil futures, and we are at 82.29 a barrel. Brent is down 54 cents at 86.57 a barrel. So a nice little relief there on gas prices, and then, or oil prices, I should say. Natural gas is also down this morning. If we take a look at our precious metals here this morning, we're also easing there. We have gold down $1.10 a share so far. We have silver down just slightly this morning. Copper is the only precious metal that's moving a little higher. Platinum and palladium looking lower. If we take a look at our cryptos are moving up here this morning. Bitcoin, after a pretty rough day yesterday, is trying to come back up. We're up 1,172 points, and that was a mistake because crypto was up yesterday. And then if we take a look at our bond prices, well, our bond prices have eased here this morning. Kind of interesting. The 2-year bond has eased back to 4.95. The 10-year bond is at 4.57, and the 30-year bond is at 4.68. So very interesting Friday morning shaping up here. But what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at some of these index charts and see if we can figure out how we might want to approach the market for today. Remember, we want to shake off that bias, and I know it's a little bit difficult to do right now being so bearish in the market, but try and shake off that bias, and let's see if we can see what the market looks like here with our support, resistance, and trend levels in the chart. Diamonds, as you can see, last night we broke lower here. We this morning could be opening at a new recent low here in the market and breaking down below this support level here in the chart. Now, if we were to continue to sell off, if the bears were to continue to push today, if we learn something more about what happened, you can see I marked this yesterday as a possibility as that next level down, and you can see overnight we came very close to testing that as support and bouncing back up. And if we were to fail this area, well, I'm going to suggest we could fall pretty hard here in the diamonds. So we'll keep an eye on that. If tensions continue to build over there in the Middle East, we could have some trouble here if those bears were to really engage. However, if we're to find some bullishness in the market today, and I think there is a reason that we could, in holding this support last night, probably a good sign in trying to show that hammer here in the pre-market. If we could follow through on that with a little bit of bullish inspiration, pushing back up into this area, first off, we've got to break through that resistance, and then we're going to have to deal with this trend. That's all there is to it. Going to have to deal with that to see if we can push on higher and maybe breaking back up through here. And then beyond that, of course, this is a big stretch here to the upside. But we've seen the market do that before. To push up that high would be a pretty big stretch. I think with the uncertainties, that might be pretty heavy lifting, but it's always worth taking a look at where those levels are in the chart. And then if we take a look at our moving averages here, you can see we've got a pretty bearish situation here developing. That first potential wave down is always distressing and always volatile. Any kind of rally back that pushes up into these resistance areas sets up that opportunity where this is kind of the wave two back up in that move, and then we would be watching for that move to the downside if we react negatively to those resistance areas. And one of the things that's probably raising some concern is we had kind of that pseudo tech Netflix report last night, and even though it reported blowout earnings and it reported subscriber growth, well, folks are starting to focus a little bit more on what actual profits are, and we are even getting a downgrade here this morning on Netflix. So yeah, remember I have been saying what we're going to have to watch in these earnings is, can we support these current prices? And considering the fact that we now have one Fed member saying, yeah, maybe one rate cut around the end of the year, we have priced this market pretty high if we're not going to be lowering those rates. So a little bit of issue here to be concerned about here in the market. And then if we take a look at our SPY also pushing back here and breaking a little bit of support here in the chart, but it wasn't terrible overnight in the SPY. So if the bears were to continue to push to the downside, I'm going to pick a little area right through here and say that would be the next area of support to the downside, and then probably down in here for the next level. Past that, it might get a little bit nasty, pushing down this low in the chart. If the bulls were to find inspiration today, then reclaiming this support would be the first thing we need to do. And then as we start pushing back up, we've got to start reclaiming these areas in the chart for that support. Now, if we were to mark this as the downtrend resistance, we could certainly break that pretty easily. I think in the chart with a good push up, pretty heavy oversold condition here at the moment in the indexes. The thing we'll have to once again be watching is for that possibility that we would tag some of these bigger resistance areas up here and then show that potential failure for that second move to the downside. We'll have to see if earnings are going to support us enough to push us back up through these areas. So moving to the upside, we're going to be pushing up into here, and then of course you can see I've got it marked up into here. That'll be kind of a critical area to be testing up in this area, and we'll be testing up there around that 50-day moving average and these shorter term moving averages that are starting to cross down through, creating that additional pressure and concern on the technical side. If we look at our QQQ, clearly the QQQ is having some rough times here, and bond prices are really affecting these here. Big tech is very sensitive to rates because big tech borrows so heavily to do research and development and things like that for their cycle of innovation. And if you take a look here, we've obviously been feeling some pressure here, and we saw some of the big tech giants continuing to struggle yesterday, holding on. And there's some real concern, I think, maybe about coming earnings reports. Can we actually support these prices with their earnings? And dropping down through these areas here of the chart, beginning to create some serious stress, an oversold condition for sure. But we'll just have to remember that we push these stocks really high also, and that maybe we just got a little bit carried away. Now, if the bears were to continue to find inspiration here, I would say that next area of price support here in the chart might be right down in this area. If we were to push on lower and then continuing down, you can see these levels in the chart, and it gets pretty ugly here pretty fast if we continue this process of breaking these support levels. Now, if the bulls can find inspiration, well, I moved that line. You saw me do that. Move that down into here. We're going to have to get back up through there, and then we need to start working through these areas here in the chart to kind of push us back up to some of these bigger resistance areas that you can see I've got marked in the QQQ. Remembering that we also have that rollover starting to happen all the way back up here. And I do think there is that possibility we could rally all the way back up to these 50-day moving averages in a relief rally. Just remember, we're going to want to be watching those intermediate areas of resistance in case we happen to stumble and fail. And then our IWM also continuing lower here this morning. We're pushing down below this next level of price support that I've got marked here in the chart. And if we were to continue to push lower here this morning, those bears continue to find inspiration, then maybe there's a little bit of area in there that we might catch, and then we're moving down through here, and then we're starting to hit these progressions in areas like that in the chart and moving down rather sharply if the bears continue to push. If we get that bullish move today, then first thing we need to do is try to pop back up through that resistance, and getting back up through there, I would suggest coming back up to that downtrend break to see how we react to that. If you notice here, we broke through and held it at one point, went up, broke down, held it as resistance, went up, and that's what makes this a very important level. So pushing that back up through here will be important to see if we can get back up through there. And once we do, then pushing a little bit higher here in the chart, you can see we've got some price action resistance in the chart, and then of course we're going to be coming in contact with that downtrend. And if we look at our moving averages here, obviously starting to show us that concern as well, putting that accumulation here of moving averages and that rollover starting to happen. If we take a look at our VIX, well, our VIX didn't really help us out yesterday. As a matter of fact, there was enough fear with the bonds going up yesterday that it was quite a concern, and we were really choppy. We had one point in the day where it looked like we were going to catch a little bit of relief, and then man, the bonds went up, and doggone it, it just didn't hold. And as you can see here, we're still holding in this upside trend to the upside. We continue to build some support in this area of the chart. We need to see some kind of strong bullish move to push us down in this area, coming back down into trend. If we hold in here, if we linger in here, I think the longer we linger in here, the more worry we will develop in the market, and then we could pop this big downside trend here in the chart. So keep an eye on the VIX. Obviously, a lot of concern here in the market. If we take a look at our T20s, our T21-22 indicator, well, this gives us our best hope of relief. And notice yesterday, we just barely lifted off of that bottom. And it was mostly the diamonds doing that lifting yesterday. To the upside, because the SPY, the QQQ, were still struggling with big tech. IWM didn't have a whole lot to say. So watch that carefully here. If the bulls can find inspiration today, well, we've certainly got the upside opportunity. But last night, even though we're down here on the bottom, we saw that possibility that geopolitical events could continue to push us lower because we dropped 500 points. And obviously, we're going to be scraping the bottom of the barrel if we do that. But we want to take note that that is certainly possible here. I favor an upside recovery, a little bit of relief rally, and with bonds pulling back this morning, maybe that will help us catch that little bit of relief. It doesn't mean we turn bullish. It means that we relieve some of the selling pressure. If we take a look at our T2108, well, our T2108 at the end of the day caught a little bit of upside. It was down almost all day, caught just a little bit of upside right there at the end of the day with the Dow trying to lift back up into the close just a tiny bit. And so we get this hook down here on the bottom, which would really suggest relief rally should be on the way. We'll want to watch that carefully. There's resistance levels in the chart, obviously. When we're 23.5% of the stocks holding above their 40-day moving average, it's obviously a very bearish situation in the market, but a relief rally bringing us back up into these areas would help an awful lot and may actually set up the next wave of selling if we were to stumble. If we take a look at our T2107 also ended up at the end of the day, and right at the end of the day, hooking to the upside. Notice we're right in here very, very close to that 50% of the stocks holding above their 200-day moving average, and we're going to have to deal with this resistance right in here to push back through. But if we can get that relief, I would expect that to occur. Keep an eye on T2107 as well. And then our T2101, well, doggone it, we continued to sell yesterday, and so the breadth of the market is with the bears here and continuing to expand to the upside. So watch that carefully. What we don't want to see is if we do get a bullish wave, we don't want to see this breadth pulling back on weakness. We want to see that breadth really showing some energy in a relief rally to the upside to help us maintain some momentum in that upside relief. Watch that closely. Let's take a look at our economic calendar here for today. And our economic calendar, well, not a whole lot going on here today, and this might also give us a little bit of hope that we can get a lift. Unfortunately, one of the main draggers in the market is Fed speak. We continue to just get more and more from them that, hey, rates are where they need to be, no reason to change, no rush to change in any way, shape, or form, and that's creating some concern here, obviously, in the market. And then we've got a Baker Hughes rig count, which really isn't going to be impactful, I think, today at all. So then let's take a look at our earnings calendar. We do have some notable earnings this morning that we'll want to be paying attention to. Not that many to go over here this morning, but let's take a look. First off, we're going to be hearing from Procter & Gamble. Looks like they've tried to pop here in the pre-market a little bit, but giving that back up, we'll want to watch this because this actually sets up as a possible short to the downside. So keep an eye on Procter this morning. We've got American Express reporting this morning and getting a nice little bump to the upside here, as you can see. Could be trying to recover, get back into this consolidating range of the chart. We've got some regional banks here this morning. Fifth Third will be reporting today. We've got H-Band reporting today. We have regions reporting today, and we're going to have numbers from Schlumberger. It looks like already moving a little bit lower there on Schlumberger. So hopefully the earnings can provide some inspiration. And what I can tell you right now is Dow futures are trying to pump to the upside here. We have halved, since I have been talking, halved the downside move. Now looking at Dow futures down only 66 points, 65 points, and they're continuing to try and press to the upside here this morning. So keep a close eye on that. We may get some relief here to the upside just yet. Let's take a look at some stocks that could be setting up. But before we do that, everyone, if this is the first time you've seen these videos, please do me that favor. Click that subscribe button on YouTube, then also click that bell icon when it pops up so you'll always be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and then click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. And thank you so much to everyone who does do that. If you've noticed, as you respond to those, I do my very best to respond to all of them. Thank you so much. It means a lot to me. Truly, truly appreciate it. Let's take a look at some of these stocks that could be setting up for today. But remember, guys, these are not recommendations to buy or sell any security. As a matter of fact, you need to do your own due diligence, be very, very careful in the market, and be ever so thoughtful about all of the uncertainties that this market is trying to deal with. Those uncertainties could just come out of the blue. If we get a rally to the upside, they could just come out of the blue and slap you in the back of the head really fast. So make sure you're planning your risk carefully here in the market. We have so cavalierly dealt with these conflicts around the world and just really largely ignored them. Well, the pressures seem to be building here, and I'm not so sure we can be continuing to ignore them in the same way that we have, particularly this Middle Eastern conflict that could easily escalate with just some minor mistakes by the two countries. So be really, really careful here and always keep an eye to that data. Now, that being said, looking at some of these charts that could be setting up, well, let's take a look. I put an alert on RTX, and obviously what I was just speaking about yesterday is certainly a concern, and this is Aerospace Defense Company. Obviously been very, very bullish. It's in a nice little tight consolidation pattern. I would be watching for that opportunity that this could pop through to the upside. Weapons makers, of course, in periods of conflict usually do pretty darn well. And you can see we're dealing with a major resistance area. Watch for that opportunity to push on through. We might also want to be keeping an eye on Lockheed Martin. LMT making a little bit of a pop here this morning. I want you to notice this cup and handles pattern that is being formed. So a cup and handle like this would typically lead to more upside, but we've got this big resistance in the chart to deal with as well. So keep an eye on LMT. There may be that opportunity that we can continue on through to the upside here if these conflicts continue to expand. If we take a look, General Dynamics would also be a place that you might want to be looking. Obviously quite a nice upside trend, but just recently we kind of broke down here just a bit. We broke that sharp upside trend, going through a little bit of a pullback, as you can see here in the chart. If we can hold some support in here, get back above this area and hold, then there may be more upside coming here in General Dynamics as well, particularly if we continue to see these conflicts expand. Let's take a look at some other areas of the market. Boy, if we take a look at financials, we had some financials bouncing up nicely yesterday. As a matter of fact, I don't know what happened in WFC, but my goodness, it took off yesterday, bouncing to the upside strongly. So with WFC breaking out up here, any rest or pullback in here that holds this area of support in the chart, I would look for that next opportunity to pick up that to the upside. Now, you do want to notice that the bigger trend is out here, and this could be just kind of a pop and a pullback into this trend, but I would keep an eye on WFC. Now, I can't say the same about a lot of the others out there. We saw JP Morgan rallying back up yesterday, but boy, there's nothing about that chart that's bullish at the moment, well below its 50-day moving average, and it really is pretty much the same with a lot of the major banks out there. And of course, bond yields creating that pressure. Now, we could get a relief, a little bounce here. We're seeing a little bit of a bounce coming into XLF this morning just because those bond yields are easing. We have seen this a couple of days, though, where we ease a little bit and then we surge back up in those bonds. So watch carefully here on the financials. And if we take a look at KRE, this is also going to be important. We've got several of those regionals reporting today, and you can see we have broken this support here in our regional banks. Watch that carefully. This little consolidating area here could certainly begin to fade to the downside, and we would start looking for these next levels of price support. So watch carefully on KRE and those regionals. Other places in the market, well, we continue to need to be focusing on oil with what's going on in the Middle East. We've had a nice little resting pullback here in energy, and that possibility does exist that we could continue if we can see this conflict ease, or we get the impression that it's not going to turn into a bad thing. We might see energy prices come back down below this trend. But if those tensions continue, and I think there's every reason to believe that they could, then we have that opportunity that we could re-engage off of that downtrend and start pushing back, or that upside trend, and start pushing back up. So keep an eye on some of those energy costs out there. We've got stocks like ExxonMobil pulling back to its trend. Things like PSX has now broken trends here in the chart. So we've got a mix of data in here. APA breaking trends, OXY kind of holding in there just a little bit. If depends on where you draw that trend, but holding in there on a trend. So kind of a mix going on in that oil sector. We'll want to watch that pretty closely. You know, when it comes to tech, we've got a lot of concern here in the market. Apple had that surge to the upside here last week, and everyone thought, this is it, it's time to buy. Well, then we faded all the way back down, came down testing this area of price support in the chart. That's a nasty and very mean whipsaw. We are seeing a little buying coming in here in the pre-market today, so maybe we can catch a little bit of bump here to the upside. Watch that closely. Remember, we're going to start moving into these big tech giant reports starting next week. Apple is not one of those, but we'll be hearing from Microsoft next week, and Microsoft also had a pretty rough day, in fact a rough week here in Microsoft, pulling back, breaking support levels. We may be coming into our next support level here in the chart and trying to find a little bit of a bounce up off of there. You will want to note though that we broke our 50-day moving average, so any rally back we have to worry about those resistance levels in the chart. AMD continued to feel that pressure. As you guys know, earlier in the week I was talking about AMD as a possible short, and I know no one wants to hear that on stocks like this, but the fact of the matter is it was setting up as a short, and we ended up going ahead and moving on down. I suspect AMD is going to come down eventually and test this area of the chart. As a matter of fact, no one's going to like to hear this. I think there's a chance AMD will see its 200-day moving average in maybe the not so distant future. So watch that carefully. We're starting to see some patterns here that are not at all bullish. Now, if we take a look at Google, Google is still holding in here very strong. Like really not much has happened here. Pretty much ignoring all of these things. So I would watch this. If I were to take a trend right up through here, we certainly could be in that place where we're going to make that decision. Are we going to hold here and bounce up, or are we going to slip lower? Can't tell you what that answer is going to be. I can't see the future, but right now it is interesting to pay attention to Google here for that potential. And of course, Meta has acted like nothing's happened in the world at all. No particular worries at all. We are pulling back just a little bit, but really, there's no damage here in this chart at all. As a matter of fact, if we look, we're holding right there on our 50-day, and that would give us every reason in a relief rally in the market to start seeing those pick back up. And I think we're going to need these big tech giants to participate in that move if we're going to get much relief. So keep a close eye on those. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great results in your trading. Be very, very careful. And by the way, we cannot forget these inverse ETFs. Okay, they are moving strongly to the upside here. Any rest or pullback sets up that next upside opportunity, and it's one of our favorite patterns in hit run candlesticks and right way options, the rounded bottom breakout. So watch that carefully, and you can look at RWM if you want a single wide on the Russell. You can look at DOG if you want a single wide on the Dow, and look at SH if you want a single wide on the SPY, and all of these are in bullish moves. And when we take a look at things like VXX, the VIX ETN, that's in a bullish rounded bottom breakout, and UVXY, SCCO, we've got, well, that's not the one I wanted, SQQQ. There we go. So lots of inverse ETFs showing bullish patterns. So any rest or pullback in here, any relief rally in the market could set these up for a long side move. So keep an eye on those. So y'all take care, be safe, have a great Friday. I wish you all the best, and more importantly, have a wonderful weekend with your family. I'll see you right back here bright and early Monday morning. Take care, everyone.